Make It Science, the podcast by HHL, Leipzig Graduate School of Management.
Hi Timo, welcome to the first episode of Make It Science, the new podcast by HHL.
Hi Henning, good to be here. Look forward to discuss the pressing questions of our time and the fundamental tensions, so I'm ready to go.
Yeah, let's get straight to the point. Then the episode is called Profit versus Purpose. You know, we talked a lot about this. Is there a real trade-off? So my name is Henning Zülch, and I'm a professor of accounting and auditing at HHL Leipzig Graduate School of Management, and I'm so to speak the numbers cruncher.
You are the number cruncher. I'm the shrink, so to speak, at our school. I'm Professor Timo Meynhardt and the holder of this Dr. and Oetker Chair of Business Psychology and Leadership at HHL. Enough with warm-up. Let's get into. And before we dissect and start a debate in detail, let's start with something we call the clash. Let's put the card on the table. So what is the hard-hitting perspective you would put on this table? So please bring your card on the table.
Yeah, purpose without profit is illusionary. That doesn't make sense. And profitability is not, from my point of view, the opposite of responsibility. It's precondition. Yeah. Only financially stable companies are able to invest, innovate, and act responsibly over time. And when companies destroy economic value, they ultimately also destroy social value, purpose, or whatever. The real danger, therefore, and for me, is not talking about profit seeking, but the belief that purpose alone can replace sound business practices. That doesn't make sense.
Okay, this is really a clash, I guess.
Yeah.
I mean, come on. To me, profit might explain survival, but profit is nothing more than a hygiene factor. In the bathroom, life is in the living room, but the bathroom is a necessary condition for living a good life in the living room. So profit is a means, not an end. And purpose, to me, is more than just moral or fashionable way of thinking. It answers the very fundamental question, maybe the most fundamental question: why should society want this organization to exist anyway?
So let's go ahead. So let's dive right in our discussion. Everyone wants responsible companies, but no business. Again, that's my point. Can survive without returns. I'm stick to that. The critical issue is whether these two goals can actually coexist: profit and purpose in a competitive market. And let's go for the question, and I start with my answer, and then you can oppose me. Can businesses advance the public good without sacrificing profitability? So my short answer is, first of all, yes, but there's a big but. But only if responsibility is embedded in the core business model, the DNA of the company. So in a lot of talks, there is a traditional view that assumes that there is a zero-sum game. That means helping society supposedly dilutes shareholder returns. But that logic is, from my point of view, again, outdated. And responsibility becomes a value driver when it is part of the business model, products, risk management, and strategic positioning. And so when purpose is aligned with business logic and governance, it builds resilience and trust. So we need legitimacy to generate profits. It's not about sacrificing profit, to make that clear.
Mm-hmm. I agree in principle. But I think and feel reality is much more messier. It's much more messier, and we have to face the good, the bad, and of course the ugly. Let's take an example. Let's take Apple. They are supposed to be the champions of decarbonization, and yet face massive criticism regarding their labor conditions in the supply chain. And the result is a surprisingly poor result in what we call the public value or Gemeinwohlatlas. They rank in the very low last corner, so to speak. And to me, to make this point very, very, very straight, is that embedding responsibility, as you say, is good, but it's also risky because it raises the moral price of inconsistency. If you claim to be responsible, the public judges you even harder. And furthermore, trade-offs might not just be bad management or luck, but there might be, in competitive markets, real structural problems. For example, doing the right thing, paying fair wages, distributing wealth in a decent manner, often costs money what the market, in particular capital market, refuses to reward. In other words, once legitimacy erodes, public value collapses, no matter how good, no matter how bad your governance structure looks on paper. So therefore, it's always a field of tension, a field of conflict. Therefore, to me, embedding is nice, but it's like a cushion in the living room. Not this time, not in the bathroom. The living room, a cushion which comforts you too easily.
Mm-hmm. Okay.
And I mean, let's push and try the envelope. Let's push and try the envelope and dig deeper into mechanics of this relationship, which is of course complex, and economics, philosophers think about since centuries. But let's stay with our management approach at HHL. What do you think are social impact and the shareholder return in their relation regards being opposites or even at odds? Or can they even mutually reinforcing in modern management? What would you think?
Yeah, okay. What you said is again, it's fair, but I don't think that they are fundamentally at odds. That's not my point. The conflict is mostly a timing mismatch. So when you look at the capital markets, they reward speed. And if we talk about social impact, this requires patience, short-term, long-term perspective. And when shareholder value is defined as short-term price maximization, that's not really true today. But if this is the case, social investments look unattractive. But true value creation is about long-term viability, and it's a long-term perspective. So companies that ignore those societal needs, like public value and things like that, responsibility, they tend to boost quarterly numbers, quarterly reports and profits, but they undermine their own foundation, their DNA, or there is no DNA in a way. Conversely, firms that integration, we have the integrated case study as an example, social consideration, accept short-term trade-offs to secure long-term stability. So the tension isn't about opposing goals. It's about different time horizons from my point of view.
And I see your point again, Henning, and I subscribe a lot of it. And still, I want to push back a little bit. From my public value point of view, the core issue, it's not time, it's actually legitimacy. Because if legitimacy, and by the very notion of it in modern society, is messy, is contested, and impossible to optimize in a spreadsheet, if I translate your argument into something which I would say is a structural problem of modern management, is you argue just think long term and tension dissolves. And this way, instead of saying social impact pays off in the long run, I could argue, don't get me wrong, but could argue this is just a smarter way of saying social impact must justify itself economically. This type of, I would call it subordination, society to profit, means that it's a derivative of shareholder value. It's something we must be able to afford because otherwise it's not legitimized. And this relationship, of course, it's tricky, but in the end, what I feel today in our environment of geopolitical upheaval in terms of climate change could mean that doing the right thing requires choices that markets will never, even in the long run, reward. And actually, to take this further, I would argue, yes, time horizon is an issue, but the deeper tension is power. Deeper tension is power because I would argue who gets to define what value is? Just the markets or society? And public value theory would, of course, argue if the shareholder retains to have veto power of what responsible behavior means, this means that the boundary condition becomes at least a contradiction by saying if alignment means subordination, then alignment is just another way of getting through shareholders' interests, maybe at the sake of, or at the cost or expense of society. So meaning do good, but only as long as it performs, might be something we felt right in the 20th century, but not be appropriate in the 21st century.
Yeah, okay. I have to immediately oppose to this because, first of all, again, profit and purpose. The purpose is the precondition, as I said. So we are not on the at the moment not on the right track together. So, and there are clear definitions. What is profit? What is sale? What are sales numbers from a accounting point of view? And then the next step is what is the value you talked about? And this is not really today not really clear. And we try our best to talk about so-called non-financials. But okay. Let's maybe go ahead with this discussion later on when we talk also about the leadership model. Mm-hmm. So first of all, let's talk about measurement next. And this is, I guess, which leads us to a question that is an ongoing question and also a question I raised a lot of times also in class. Do you think these ESG metrics genuinely help bridge the gap between profit and purpose, or are they more a kind of distraction?
I mean, yes, but this yes comes also with a but, as always in our research. I would say it can be both. Of course, at its core, it's a noble attempt to make comprehensive performance measurable, moving beyond profit to people and planet, this kind of the beginning of the century of thinking. Therefore, it's promising because it institutionalizes in a new way responsibility. If it is so kind of baked into strategy, into risk management, investment decisions, responsibility can stop being regarded as a side project and it becomes part of the management system. And this is the advantage. This is the real promising part of it. However, and still, it can become problematic, like always in life, has a dark side. Public value is a lived experience, and you can't put it into a reporting category without losing things. So people might ask, does this company act fairly? Can I trust it? Does it treat people with dignity? And ESG metrics often capture what is measurable. What else could they measure and be categorizing? And not as what's socially necessarily meaningful and emotionally charged. So to make it clearer, a company can have a great ESG score and still lose public value if people lose experience. It's if they regard their behavior as hypocritical, even exploitative. In a way, if it's used as a tool for decisions, it can help bridge this tension between profit and purpose. But it becomes a distraction when it's treated as a substitute. If it's treated as a substitute, as a kind of a virtue scoreboard, and just rewards box ticking instead of answering tough questions. Therefore, it comes from both sides. It's a yes and a no. And again, this who defines performance, who defines the public value is something ESG might be capturing. I expect ESG to grow and still be just another wave in the right direction. Mm-hmm. I would put it this way.
Yeah, okay. Timo, I agree to you, but the picture is not as easy as you mentioned. The problem is that the ESG metrics promise, as you said, to translate complex social issues, the social reality into standardized data. That's what we do also in reporting standardized data and to get a picture of the true and fair economic picture of the financial situation of the company. In theory, that makes non-financial performance actionable, and in practice, however, and this is a problem, they suffer these ESG metrics from severe limitations. So you have an inconsistent methodology or methodologies. You have 4 or 5 different ratings agencies and systems, and 4 or 5 different results. So for the same company, and this is also for the capital market really confusing. And what happened and happens is that the companies start to game. It's like a numbers game, not earnings management, as we know from the reporting issues. They try to optimize everything, and this is not let's say what we want to see. We want to have an insight into how deep is the belief in the thing called responsibility and purpose, and is that really not only a party talk, so to speak. And what we have to see that critically ESG captures observable actions, not, and that's important, societal meaning. And it measures what companies do, not how they are perceived. And this is the other part of the coin. So as you said, a firm can ace the scorecard and still face a crisis of legitimacy. And ESG metrics are, from my point of view, useful proxies, only proxies, but they must not be mistaken for a comprehensive measure of responsibility. They are not a comprehensive measure of responsibility. They are only narrowing this kind of, let's say, responsibility or purpose. That's, yeah.
And maybe as another question in this regard, you are the expert in the field for many, many years, and you have seen waves and fashions and things come and go. We have seen GRI, we have seen the reporting standards changing all over the place, and now ESG. Why would you think this time it's different? I mean, environmental, social governance, the three letters standing for. Why do you think it's different this time? Why should the audience, our students, why should the public believe ESG this time makes it better than it used to be in the past with all the metrics?
Yeah, it comes back to a discussion I had a decade before with our dear colleague Andreas Suchanek, and I talked to him about, let's say, social or responsibility, and said we need numbers. So, and he said no. And today I have understood what he meant by this. So today we try to give numbers on that. And that's also true for ESG ratings. We try to give numbers on it and give you a scoring point for the quality of ESG. No, the quality of ESG is, as you said, and we will talk about it, a leadership. It's power, it's leadership, and it has to be part from the top to the bottom, and that's it. If this is not the case, then it doesn't make sense to talk about corporate social responsibility. Yeah.
I see that there's a new attempt, and maybe it's more serious in this years than it used to be in the past.
Yeah.
And this takes us to the boardroom. I mean, would you think that this type of purpose or public value reporting should be even something investors and boards should care? And how would you say how they should care? Not to get distracted, measure what's measurable, but still being aware of the limits. How would you report or comment on this one? Should boards and investors explicitly measure public value creation, and how?
Yeah, definitely a bold yes. So it has something to do with legitimacy. And this is a critical resource. So boards, and also especially boards, must measure public value alongside the financial performance or the financial numbers. But what I have to state is that this is not about replacing financial accountability. It's about complementing it. It's like a part of the puzzle. It's a complement, purpose and profit, as we said at the beginning. And while financial metrics offer a certain kind of comparability, public value requires interpretation and judgment. Another kind of storytelling on the financial field. And instruments like, as you said, the public value scorecard are not designed to deliver truth, the real truth, but to structure reflection. And that's an important part or crucial part. So to control, from control to sense-making, make this really sense. And by revealing trade-offs, tensions, and external expectations, those things, scorecards, enable boards to ask, and that's an important part that I experience a lot of times, better questions about the societal consequences of the company strategy, the C-level strategy. And the goal is, again, integration, not a separate reporting exercise. And this is to build the bridge to our cases and to our lectures. This is what we teach in our integrated case study, to bring together all the stuff like reporting, marketing, and so on, and so strategy. Not think about silos. It's an integrated interaction.
I fully agree this time, 100%. Even I just could echo you by saying, of course, it's separated. If it's decoupled, it doesn't make sense. It becomes more theater, and integration is a challenge. because it forces us to bring the trade-offs into the room, to ask better questions, bring the trade-offs in the same room where capital allocation happens. And this type of, I like the term when you use the sense making, this type of structured sense making to help leaders not just to wire it in strategy and risk assessments, but become more articulate to interpret the numbers. And therefore, governance technology, I would even argue, would be one which is holistic, having the right numbers, the right sense-making competences at place, and by doing so force boards to confront consequences they can no longer ignore. And might be the real value, as to say, and I like this on you also said, to have better questions, not just the answers, better questions, and to force us into this structured sense-making dialogue, which is so necessary given our time. So we are in a war, we're in a climate change scenario, we are in new situations of new types of tariffs, our partners decouple partly, whether it's China, the US, or whatever. So it becomes much harder to come up with easy answers, and better questions could be nurtured by better systems. And public value and the numbers are not enemies. They might force boards to face the bad, the good, and the ugly, of course.
Mm-hmm. And what happens is that the parties involved become more knowledgeable because they have to get involved into everything that is going on. And we have on the European Union, in the European level, all the, let's say, directives about responsibility and things like that. We will talk about this. They become more knowledgeable. And if you dive down into it, you can ask better questions. And that's a good thing. So, okay, we talked about the how. Let's focus on the why. We need to address the elephant in the room, authenticity. So is doing good, the word is also criticized heavily, becoming a strategic necessity or just another form of marketing rhetoric? What do you think?
I mean, at the surface, the answer is easy and maybe even a no-brainer. It has to be absolutely a strategic necessity given our crisis situation, polycrisis or whatever. Businesses realize they operate inside society and not alongside. And it depends on stability, on the power of law, on trust, resources. When business forgets that, it becomes fragile. The boundary conditions, they can not install, they can't just buy. Qualified labor forces, good regulation is something society provides for businesses to flourish. In a way, I would argue today, doing good isn't charity. It rather means to contribute, to solve, to overcome, to face grand challenges of our time. Climate change, AI safety, transparency, as mentioned, geopolitical security. And increasingly, a business strategy today is shaped by businesses of war, questions of war and peace. For example, energy security, cyber resilience, disinformation, critical infrastructure, and so on. And this is where the difference between marketing and real strategy becomes crystal clear, very crystal clear, that doing good is not just rhetoric, because the idea, if it stays outside the business world, the business model, business collapses because the very moment pressure rises, companies aren't resilient, aren't prepared. Therefore, treating good as an arena of future markets, legitimacy and competitiveness are decided, becomes strategic. But the very environment forces companies to contribute, otherwise they lose, in the long run, even competitive advantage. In other words, the winning logic these days, I would argue, is not profit versus purpose versus profit, but profit through purpose, profit through third. That's where demand, regulation, and I would also hope capital is moving. So companies don't just have a choice whether or not they serve the society, they rather can decide whether they do it constructively or destructively. In a world shaped by crisis, doing good is even kind of a raison d'être, is even a price of admission to be part of the game. Otherwise, you're out of the game.
Okay. I agree with everything you said, and I agree with the necessity, and that's quite good. But we must acknowledge that there is a lot of criticism. For too many companies, purpose remains sheep talk. In our experience, is that still today there is a lot of, let's say, sheep talk in the room, besides all the directives from the European Union and the legislation and the over-engineering of legislation. But what my point is, as long as purpose aligns with profit, everything is fine, everything is easy. Its value is only revealed in the face of trade-offs. So choosing standards over margin or credibility over speed, the timing effect. So if purpose crumbles under financial pressure, it was never real and is still not real. And the distinction is simple. Confined to marketing, purpose is just reputation management. It's just storytelling. When it dictates, and that's the important point, when it dictates allocation, incentives, and risk, it becomes a strategic asset. This is the DNA of the company, I say to this every time. Authenticity is defined, and we talk about this term, not by the words on a website, not by the annual report and the words in the annual report, but by the difficulty of the decisions made, the final investment, for example, decisions, or decisions addressed to the workforce, for example. That's it.
I mean, Henning, the two of us, we are professors at the business school. We are in front of our students, advocating and arguing and finding evidence, bringing evidence. At the end of the day, we are all humans. And it boils down to the question how to avoid in practice those pitfalls. We agree that the risk of empty rhetoric is high, good intentions aren't enough. So let's move on more on the personal side, the psychological side maybe even. So the question is, how can companies and leaders committed to purpose stay in this game without falling into the trap of purpose washing? It's no longer just a question of systems, it's also a matter of attitude, mindset, competencies. How to avoid falling into this trap of purpose washing?
Okay, understood. So it has something to do with structures. So the organizational structure. Purpose washing or greenwashing happens when bold claims of companies meet unchanged organizations or structures. That's my experience. To escape this trap, companies need a structural change, not just a better storytelling, a better financial communication, stuffing more investor relations managers or things like that. So based on my experience, there are three levers that are critical. First of all, you need incentives. If purpose doesn't affect capital allocation or executive payment remuneration, it remains symbolic. First of all, incentives. Second, radical transparency. Radical. Credibility requires also disclosure failures. Not only talking about success and success stories. Explain a loss in your profit and loss accounting. What is the case? You said that we are in times of trouble, means wars and all the other things. Talk about the real picture, and that talk about also failures. And the last part is, the third one is feedback. Purpose cannot be defined inside the boardroom on the level of the C-level and the supervisory board. It must be validated by those stakeholders who are affected by it, especially the employees. Ultimately, authentic purpose requires humility. I'm a numbers cruncher. Talking about humility is a little bit ridiculous sometimes, but it's important. And companies cannot declare themselves responsible. That's not the case. Legitimacy has to be earned, is earned. It's not proclaimed.
Right. I like the word when you use the word humility. We all were born and we were raised, we had a childhood, we had education, and then we become mature personalities even. But not everybody is in this humility space as you are calling for. Therefore, I want to change perspective a little bit to a more psychological point of view. Of course, I agree. Legitimacy must be earned. Walk the talk is very hard, but the workers, they need competencies, kind of muscles, mindsets, resources in the inner space of operating. And therefore, I would argue oftentimes it's not just a strategy problem, it's a maturity problem. Maturity problem of adults. And in our teachings, I like a lot to use developmental psychology to explain how people move in their adulthood until they reach this state of wisdom, humility. And we think, here it comes how we think. Using colleagues' model by Bob Kegan, Harvard psychologist, used to delineate different stages of development of consciousness. After becoming an adult, most of us are in a mode of what he calls a socialized mind. We are apt to chase external approval. The talk, what's acceptable is also our talk. We try to please others. And typically in companies where short-term profit is embraced, we would just follow this to avoid conflict, to be socialized, not because people are dishonest or lying, but because the inner system is tuned into this sense of belonging, status, getting promoted, and avoiding conflict. And the stronger ones, the better ones on their way of becoming great leaders, not just managers, but great leaders, they avoid purpose washing because they follow what Kegan calls the self-authoring mind. They act from an internal value system, not necessarily depending on the other's feedback. They can even hold the line under pressure. They don't break down under pressure. So being honest about trade-offs needs courage, needs kind of inner space of strength. Even if it costs them their influence, even their job, they would start and raise the questions, becoming able to be articulate and not just follow the others. And the very best one, that's the latest stage, is what Bob Kegan calls self-transforming mind. Those people understand that purpose and profit and ultimately legitimacy is complex. It's not just either or, it's not just black and white, and they're able to hold this complexity without getting paralyzed. They're able to learn without getting defensive. And they adapt without becoming opportunistic. And those stages might explain a little bit why it takes hard and long inner work, as we call this, to develop this stage of maturity and to be able to balance different forces and not just talk while the others talk. They don't fear conflict, rather use as an engine of change. So to me, as I said, it's not just a strategy, but it's a maturity problem to implement what we just talked about. And in this space, Henning, I would say only when your actions and words match, those people might be the leaders ready to take up this challenge. Even more so in times of crisis, we need more of those, what Bob Kegan calls self-transforming minds. Otherwise, structures are and incentives are nice, but it takes the right people to perform this new type of management or leadership.
Okay, so Timo, thank you very much for your deep dive into the psychological research and the findings. So let's turn to, let's say, the empirical research, or the not only empirical research in financial accounting and financial communication. So our specific research adds a crucial layer to everything we talked about, and the term is financial integrity. So you see, integrity has something to do with, also humility. Maturity. That's it. You don't have to choose between profit and purpose, but you do need financial integrity to sustain both. And it's maturity. Yeah, that's right. And companies with a robust governance system and high-quality reporting consistently outperform both, let's say, idealistic firms and unethical performers in the long run. This is a term for, let's say, greenwashers, idealistic firms and unethical performers. So firms pursuing social goals without kind of financial discipline often fail. And purpose without financial integrity creates a kind of fragility. It cannot survive the economic pressure. We talked about times of a crisis. Then it is like it is destroyed in a way, the picture they painted beforehand. And conversely, firms that engage in unethical behavior or rely on we say, aggressive accounting activities, earnings management may win short term. But again, timing plays a major role, but they destroy value eventually due to higher risk and volatility on the long run. So time mismatch again. The winners are, and this is the experience of what we experience with our competition called Investors Darling with the Manager magazine, that companies, or the winners are companies that combine economic performance with financial integrity. There are a lot of companies, especially in the German market, that do so and are best practices. Research from our side indicates that these firms benefit from higher earnings quality, more credible capital market communication, more effective governance mechanisms. This is the, let's say, causal chain we identified. And financial integration reduces uncertainty for investors, lowers risks premiums, and builds resilience. And most importantly, financial integrity, and this is an important point, bridges on the long run profit and purpose. And when CSR commitments show up in the numbers and internal control, they become, that's what we also see, credible.
I see your points, and I like a lot how you build this logic of causal chain. And if you ask me about evidence from my perspective, I might start with a statement of humility in a sense, also for us as researchers. I mean, let's face it, we are in social science. It depends on context and timings and so many circumstances. So our social science results are also, of course, value-driven. Even the question defines the answer space and so on and so on. But still, I would say evidence is out and it's quite robust. A public value orientation can pay off in capital markets. It can pay off in capital markets. After 10 years, we show higher returns, both in single sources and volatility. At the same time, this was shown in the US market. At the same time, we have good evidence showing that startups which are public value oriented have higher survival rates. And interestingly, what we see from the investor's point of view, it's fascinating even to see that at first, in the very young years, in the early stage startup phases, investors might think that purpose and public becomes a distraction. But as startups mature, investors start to appreciate public value orientation, and then it turns into a competitive advantage. So you have to go through this valley of purpose death, I would say, to be reborn or to be seen as a investment case. This is the outer perspective. What we also see internally from the workforce side and customer side, the pattern is very clear. Purpose is linked to higher engagement. Once you feel you work for a company contributing to more than personal gain, and your individual purpose is aligned with the organizational purpose to contribute to society, this has positive effects on, as I said, motivation, on higher engagement, and even on flow. So people simply show up differently in the morning when they feel their work contributes to something bigger, transcending their immediate job requirements and see that it can make a difference. So in a way, it's also investment in the workforce, the people, the talent, to attract talent, to retain talent. Then purpose, it's not a campaign. It's a growth logic, as I said, a winning logic, both for the company to contribute to solve current challenges, but also help people to grow internally. So grow by contributing to society's well-being is the bottom line of our current research after 10 years trying to match with correlation and other means to come up to justify this idea that public value matters. And I think as a next step, Henning, that our results, your results, our results, they do not exist in a vacuum, and we have chairs and we are in the teachings. So I would even say that if we start and translate this into lectures, into seminars, I would be interested in your perspective how all this relates to what we have been together since 10 and more years developed, what we call the Light Leadership model. So how would you say is all this reflected in this faculty model of what we call Light Leadership model?
Yeah, it's definitely reflected in the Leipzig Leadership model because it's again a bridge for every one of us to combine what we research together with the overall goal and mission statement of HHL. So the Leipzig leadership model explains, from my reporting and accounting point of view, why financial integrity works. It redefines integrity from a technical reporting issue to a core leadership capability. And this should be, reporting is part of leadership. And the model teaches that numbers are not neutral. It has something to do with, you said, maturity. They shape, in a way, how you treat, how you go for your accounting, your culture, your company's culture, in a way. So leaders who tolerate opaque reporting implicitly signal that short-term gains outweigh ethical standards. So there is a certain characteristic, certain companies, certain C-level act like this. And these are classical patterns you can see in the market. Conversely, leaders who insist on high-quality reporting, and this is what we try to measure with our investors' darling, reporting build credibility through consistency. And what's about LLM? The Leipzig leadership model emphasizes on the long-term orientation and reflection. It's not about earnings management, make numbers. It's about to manage expectations proactively and communicate trade-offs openly. That's my opinion or my perspective on financial communication and reporting. And last but not least, ultimately, the LLM bridges profit and purpose, again, the bridge, by framing what? It frames responsibility as decision relevance. So in reporting, we say everything we do has to be based on a so-called decision usefulness approach. And this is the case. It's not a moral decoration. It gives us a certain relevance in terms of making decisions. So, and integrity, in this case, reduces risk, builds trust, and allows purpose to endure. And this is supported, from my point of view, by the Leipzig leadership model. Yeah.
And I couldn't agree more, because I also feel after the 10 years operating with this model that it also helps us, for example, to structure dialogue between the two of us with other faculty members. We have a frame of concepts which link together in something which also works in the classroom. If you have students from all over the world, it's not just Leipzig, European model, it's rather asking the hard questions, which should be relevant all over the place, whether in China, in the US, in whatever country our students come from. And the idea, I've asked myself why I like it so lot, the model. I mean, you could say it's a flagship of the entire faculty. I mean, you can do marketing, but if it boils down to classroom discussions, it's about asking the hard questions. As you said, to hold the tensions productively without being imbalanced, and it always keeps us in the middle space of what is, from a common sense point of view, meaningful, with financial integrity, with responsibility, with entrepreneurship as yet another point. And of course, as we also say, with effectiveness. Something can be very responsible but meaningless in terms of effectivity. First, you have to solve a real problem, the technological one, whatsoever problem, and then the purpose should fuel it, the purpose combines it, holds it together. And what I feel in classroom situations is often that students are astonished to see that purpose in our thinking, in our Leipzig school, as I would call it, is more than I want it because I want it, or more than I'm passionate about, that's why it's my purpose. We say in our model, purpose answers the questions why and what for. Why and what for, how we do contribute, not just to the workers and the talent, but also to the organization and society and the customers. And this is articulated in this framework, and we use it also in our coachings to Leipzig talents to nudge students to confront this with the inner value system and start this, what I call the inner work, where they have to hold and not being paralyzed by contradiction, to face the ugly, see the good, and promote the better one. Therefore, the LLM to me is a language device to talk about from different viewpoints, from your viewpoint, from other viewpoint, from my viewpoint, that leadership means hard work, contribute and grow means many things to many people, but at the core, we argue conflict is not to be avoided, but conflict is the driver of change. Don't avoid to ask the tough questions, but use it as something to be more productive, even more creative, instead of hiding over leadership as something for decoration. But it's leadership work is hard work, and it starts with the individual and should not end with numbers, but numbers are integral to have this conversation in a way which is also non-ideological. This is also very important to me that life leadership model is not, of course, we are in a social market economy. It's not free from values, but it should be open to many cultures to have impact also on our Indian students, our students from abroad, be it from China, from France, United States. And this is, I think, where we can really contribute with this model. And full stop. I stop here because otherwise I can't stop myself.
Maybe some remarks on that, because you talked about effectiveness. So it's some say sometimes, okay, it's nice to have a leadership model. These are buzzwords, and you can't exercise this in practice. So we don't want to exercise this in practice. We want to have a guideline. So this is an important part to focus on the relevant things. And one relevant thing for me is also effectiveness. To tell them, it's the easiest thing. What's the difference between efficiency and effectiveness?
Yeah.
So, and this is the problem we face, is timing mismatch. We want to be efficient, short-term goals, do the things right, and don't think about the strategic point of view means doing the right things. And this is the thing we have to keep in mind. And when we talk about public value, we talk about purpose, we talk about corporate social responsibility, is not efficiency. It's effectiveness, what we talk about. And this is not only nice, this is great to talk on the level of the Leipzig leadership model, because this easy example tells you, okay, it has something, again, I'm on your side, maturity. Think about this.
I mean, I guess our audience now gets excited, how excited we get about our model. Yeah. I may add another layer to it. When you just emphasize the model enables us to discuss the difference between efficiency and effectiveness, I might also add this, when we discuss the term purpose, which is, of course, a very Americanized way of saying why we're here, what we are doing, who's beneficial, who is benefiting from it, cui bono in a way of why and what for we create value. I often feel in classrooms students are surprised, sometimes even shocked, when they realize that the individual purpose is not necessarily what we mean in our model. In other words, they realize in a very early stage of adult development that, hoppla, my own individual passion is not necessarily what the life leadership model calls for. So I have a developmental task even. And we developed a test now, a scientific test, validated in a reliable way, published, where you can actually measure this type of maturity of our young students. When I use the term maturity, I mean different motives, there are different leadership orientations as a starting point for their own development. And I hope once they turn 40, 50, they might remember our HHL experience in a way that, oh, this was my developmental path. And at HHL, I started this inner work, becoming more mature with regard to the developmental stages. And yes, maybe.
Okay, full stop. Let's talk about. We talked about, let's say, more the theoretical stuff. Let's test them against the reality. So the impact proof, so to speak, and move now from theory to practice. Yep. So my example is the Krombacher rainforest campaign.
I know where you're heading to, but please go.
Yeah, and this was, I remember this. This was the European Football Championship 2008, and Krombacher started a campaign for every crate sold or donation of €1 was made for the rainforest. So communication-wise, excellent. It was brilliant, but structurally, it failed from my point of view. The problem was, as I said, the disconnect. Brewing beer has nothing to do with the tropical rainforest. So nothing to do with the business model of Krombacher. The campaign focused on, and we talked about this doing good. And I said this is a term that I heavily today criticize. focused on doing good externally rather than addressing the impact internally. So, and the problem was that later on, in I guess 15 or 16, there was a public debate that started and shifted to glyphosate in agriculture supply chains. And suddenly the rainforest donation looked less like responsibility and more like a distraction. The question shifted from how much do you donate to how responsibly do you produce. So a business model counts and the integration of responsibility in the business model. And it's not doing good. It's when we talk about, in our terms, especially accounting, financial performance, we talk about an avoiding bad strategy. This would have been far superior than the thing before, the rainforest campaign. Instead of outsourcing the impact, Krombacher could have focused on eliminating pesticides from its own supply chain. This would have strengthened the product and reduced the risks. So what is the lesson out of this kind of case study? Credibility isn't bought with donations, doing good. Responsibility cannot be outsourced. It's part of your business model, an integrated part of your business model. So it must be embedded in the company's own operations, and it must start at the core, at the business itself. So that's my case, and that's it.
I mean, I see this point that the whole responsibility thing from the 80s to the 90s to nowadays moved from a side talk, CSR and so on, to the core of the business model, strategy. And only if it's there, it becomes real. It becomes real once it's embedded in this operating model. And still, I want to add another layer when you said you don't like the term to do good anymore these days. I would argue that the meaning of the term has also evolved and changed over time. I would interpret doing good as I said, it means to contribute to tackle the grand challenges as a kind of price for admission to be in the market and in the end to turn it into a competitive advantage. And let me take an example maybe from the automotive industry. Currently, we have this debate. Let's, for example, take BMW and Porsche. In the whole industry, there's this question of how to decarbonize in a way which is doable. And from a public value perspective, it's not just the question who sells more EVs, more electric vehicles. It's rather the question who earns legitimacy by contributing, doing good, as you would have said in the past, to climate goals and industrial resilience. It's kind of both. And if I compare Porsche with BMW, I would argue their strategy is currently to electrify, but to keep options open. To electrify, to see in their earnings more stability. This is the upside, protecting margins and supply chains from abrupt shocks. The risk, of course, is credibility, assuming that the people, environment, customers, and politics, and even employees regard this flexibility as a delaying, shying away a tough decision. Then legitimacy might erode quickly, and therefore they risk this type of trust because of their pace too slow, too laggard, delaying tough decisions. On the other hand, BMW, their strategy is rather, I would argue, transformation at scale. The upside is system impact. Moving broadly and visibly, of course, can accelerate transition and signal commitment in terms of new ideas to take it to other, not just to one car, but to all cars in the whole spectrum. And still, the risk is trust. If scale raises expectations of workforce transition, commitment, supply chain response, and so on and so forth, and those expectations aren't met, let's assume this case, there might be a swift backlash. In other words, if the case won, Porsche risks by being read as delaying, BMW risks by not fulfilling this idea of a broad transformation at scale. In public value terms, this is to me the novel point of view. Both will be, of course, not judged by the ads, but their actions, and whether their choices are experienced as fair and a genuine contribution. Of course, in the end, it's about a competitive advantage. In the end, it's about being stable in the market. But from a societal point of view, which is my main view today, is there's a bet on the future, whether system transformation or this rather slow keeping options open will turn out into a higher public value assessments. And you will see the next Gemeinwohl Atlas where our car makers, German car makers, are ranked. And maybe this could describe how risky it is, on the other hand, also rewarding from a growth logic to grow with society, not against, by solving society's most precious problems and challenges might help the business. And this kind of mutual reform, if it works out, it's of course very nice, but the tensions are there, and we will see how the race will end. And I mean, make it in a different direction, also more visible what we think, almost coming to an end. Henning, we talked about the status quo, and we as scientists, we are very good explaining the past, but we have hard time to predict anything. That's our problem. And maybe let's leave this status description, and we can, of course, debate on whether it's rightly framed or this factor is missing, but let's come to the future. And if you could place a future bet, a prediction, where this debate will head to, what new types of conflicts might, or what kind of, I'm not saying advice, we are not consultants, we are scientists, we are professors, we shy away being too simplifying. But in a way, where do we stand in 5 to 10 years' time, Henning?
Or I start with a boah. So that's a challenge, but let's try it. So my future bet is that financial integrity will become the decisive differentiator. Financial integrity. What does it mean? What we see with the new EU reporting regimes and directives, CSRD, EU taxonomy, sustainability reporting is shifting from a voluntary storytelling to mandatory disclosure. We have to talk about non-financials. We have to talk about corporate social responsibility. And it's not talking about the era of green narratives that are disconnected from financial reality. This is gone. So you have to integrate this into, for example, in your annual statement, in the management report, as integral part, and you have to show that this is part of your DNA, of your business model, and part of your strategy. So it has changed dramatically, and my prediction is that companies that treat sustainability reporting, talking about that, as a compliance burden, will lose resilience. It's not compliance, it's much more. And the other way, the opposite is those companies that treat it as an extension of financial integrity, applying the same rigor and controls, will gain a massive competitive advantage. So it's not only talking about a burden, bureaucracy burden the European Union has done. So it was limited today, but it makes sense to think about your business model in terms of changing times of pressure from not only the market, but also all the stakeholders. And the EU regulations are a real stress test for leadership.
Right.
Yeah. And markets will reward those who pass it and penalize those who don't. Leadership. That's it.
I mean, we could say business is also a reflection of society, and conflicts in society are also reflected and mirrored in how organizations act. And if you say, and I could very, very, very much follow your lines, and I have also two scenarios to describe it in my words. One is more a scenario of integration, one of polarization, which is also a societal challenge, how we integrate in this country or in other countries, or how we even more polarize in terms of societal disconnect. The positive bet, I would argue, is, of course, purpose by any means, let's say, what word will be in 10 years' time the word of the day, but today it's purpose, societal contribution, do more than just earn profits, but profits as a necessity, and so on and so forth. But this way of thinking becomes the operating system. I guess it's very close to your idea. It becomes the operating system. In 5 to 10 years, let it put it this way, legitimacy is priced in. It's priced in. The purpose won't just sit at the side corner, it's on the table. It's in the boardroom. It will sit in strategy and risk and not somewhere else. The winners, fully agree, in my words, will be those firms who solve problems at scale, are able to turn it into a competitive advantage. This is the promise with climate change. This might be the promise with AI, with all the big things currently on the table. This is the good scenario. And maybe the reality is in between, but to sharpen, there's the positive, there's a negative scenario in my eyes. Purpose becomes theater. The promise of capitalism to provide wealth and well-being for everyone, this promise is getting even more empty. And this type of theater, purpose theater, as I would call it, is then, you already use the term, then ESG, for example, becomes gaming. It's just a dishonest play. It's not a compass, it's not impact-driven, it's just a kind of facade, decoration, as you said. In a way, of course, in our political times, purpose might still be used as a weapon for or against X, Y country, for or against a certain type of societal support, and we will see how business leaders will stand up or not in times of crisis of democracy, for example. But if they have not a clear purpose, I would argue they face volatility, at least at the stock market or with the investors, but also face lots of criticism. And here's my bottom line. In both scenarios, in both bets, purpose becomes more important in either scenario, either way, it becomes more important. It can become a force for good, it becomes real, it becomes governable, it's priced in, or it becomes explosive and just a performative action without consequences. But in any case, it becomes more important to discuss this next year. So we have lots of work to do in research and teaching as well.
Definitely. So let's bring it all together. It's time for a wrap up. So let's talk about consensus and dissens. So we started with profit and purpose as maybe trade-off, and we talked a lot about different things, LLM, empirical studies, and stuff like that. So let's start with the consensus of what we said. So from my point of view, the consensus I've realized during our talk is that profit and purpose are not enemies. Yeah. And the conflict arises only when, that's my opinion, integrity is missing. Integrity. So profit is not the problem. The problem is profitability without integrity, transparency, and accountability, what we need as accountants. So, and let's go back to the empirical evidence we talked about. This evidence proves that companies which ignore financial integrity may gain in the short run, short timing, but they lose trust, increase risk, and ultimately destroy value on the long run. So responsibility becomes credible only when it is reflected in financial decisions, reporting, and also governance structures. So a purpose that doesn't show up in the numbers, also in the numbers, remains fragile. And in that sense, profit is for me the mechanism that makes responsibility scalable and sustainable. That's it. Yeah.
Okay, to draw a big picture, I think I can agree 70%, but there's still disagreement.
Okay.
There's dissensus.
Okay.
But to find a common denominator, not necessarily the smallest, but maybe a workable one is also a starting point for our future cooperation. Of course, I would say profit and purpose are not enemies; they are allies. I would call it a little bit and say profit is the fuel, not the enemy. The fuel meaning that yes, integration is the goal, but it doesn't happen on autopilot. It depends on the psychological maturity of people. I guess this is what you also agree. Would you agree? We also said governance can be formal and metrics can be gamed. The real test is reality. It's where the leaders use their room for maneuver to do the hard thing, not the easy thing. This also I heard from your side. And also with this consequence or this the insight that profit must be seen as a means, not an end for itself. It won't work otherwise. Otherwise, it would be downgraded to decoration. And we also said, and I can agree, mature leaders treat conflict as a driving engine for change, development. They name trade-offs, they hold tensions, they make coherent decisions under pressure, communicate transparently. And I fully agree when you say profit can be the mechanism that makes responsible scalable, but only, again, if leaders are mature enough to use their discretion responsibly and are brave enough to turn unavoidable conflicts into learning and transformation. That's my point. I guess this is where we have consensus, but I guess there's also dissensus.
Yeah, it's fine. So this is how our research and the, let's say, our interaction at HHL works. That's it. So and besides the consensus, we have to talk about the dissensus. So from my point of view, financial logic is the starting point. So first financials, then second precondition purpose. Without credible numbers, and you see credibility that has something to do with trust, integrity, transparent reporting, and robust governance. I repeat it again and again and again. Purpose cannot survive economic pressure. So when we talk about reporting, we talk about the whole system that is what was implemented together with governance structures and transparency. And if this is working, and the precondition is also maturity, leadership, and all the stuff like that, then purpose is able to survive. That's it. Yeah.
Okay, this is really the census.
Okay,
Maybe every good conversation entails new questions for next conversation. I hope we can continue this. And of course, I disagree with your very first sentence if you say financial logic is the starting point. I've never seen a human being standing up in the morning and say, oh, today I'm contributing to shareholder value, to financials. They get up in the morning, are motivated because they want to contribute, to want to change things, to build something. So to me, the starting point is always purpose. Also for many entrepreneurs, startup and founders, they want to change the world. Of course, with money and they need resources. So financial logic can, and to me, should never be the starting point. But this is our dissensus maybe. And I also clearly see your point on short-termism as a challenge. And still, as a psychologist, I'm not convinced that we can solve this challenge at scale. It would require leaders able to delay gratifications, but human beings are not that mature in the majority. So we must face and also the public value-made demand constraints, redistribution, even maybe slower growth that remain even irrational to the capital market. So the capital market logic is a real structural ambivalent beast to make profit and purpose friends. And when I said at the beginning, for me, profit is a hygiene factor. If it's there, nobody would complain, but it's not enough. But the very point when it's missing, soon it's missing, people complain. And I would still keep this metaphor. Purpose is in the living room and profit is in the bathroom. Profit is a means, not an end. We want to have a comfortable living in the living room, and sometimes we have to see the bathroom. We have to see the toilet. Even if it's dirty, we would complain. But the real life is the living room. Money is there for solving problems and not for the sake of itself. Companies have to serve society and not the other way around. However, society can only survive with an economical model which helps people to satisfy their daily needs, buy some bread, have some light in the room and showers and so on. So satisfy needs in society, but we should not pervert this relationship between profit and purpose. Profit is a means and purpose is the end. And hopefully they can make friends sooner or later.
Okay, that's a real dissent. So from my point of view, it's totally, as I said, financial logic is a starting point, but it's nice. So for we have we have a consensus. We have a dissenting opinions, and that's quite nice because dissenting opinions.
That's HHL.
That's also a starting point for talking to get a consensus. Maybe I learn from you, and the other way around to bring together our professions. Yeah, so. Maybe let's talk about some. And I thought about what you said, and I thought about what could be a clothing thought from my point.
Mm-hmm.
So perhaps it's not sticking to the financial logic and stuff like that. Maybe the true conflict is not between profit and purpose, but between short-term optimization and long-term resilience. Maybe we have to take another perspective. And companies should not ask if they should choose profit or purpose, but how to align leadership, integrity, and legitimacy to make both possible. Because purpose without profit doesn't make sense. Profit without purpose doesn't make sense. It's not a one-way. Yeah. So profit keeps companies alive. Legitimacy makes them acceptable, and sustainable leadership means managing both with integrity. That's it.
I fully agree.
Yeah.
Henning, every nice conversation comes to an end, and also our reflection should now somehow be finalized, or at least for the very moment, because I have to see my students in a minute or so for the next lecture. But a closing idea and a call for reflection maybe to our audience. We have laid out our arguments on the table: agreement, disagreement, consensus, dissensus. But the real work happens in organizations, in companies, and this might bring us together to a final call. What would you like our audience to reflect after this podcast? What they should think about?
Audit your decisions. That's my point here again. Look at the last major investment or budget decision in your company. Did responsibility actually change the outcome, or was it just a slide on one of your tons of presentations? And ask yourself, where does purpose genuinely influence the financial numbers in the organization? So it shouldn't be party talk and storytelling. It should be your DNA. That's it.
And here's mine.
Okay.
Audit yourself.
Okay.
Look inside yourself. Start this inner work. To what extent are you prepared personally to face the ugly, the tension? I mean, it's easy when profit and purpose go hand in hand, but what happens if they collide? Do you smooth it over? Are you prepared to name the trade-off? Do you have the courage, even maturity, to do so? And ask yourself, am I ready to handle the ugly part of this debate, the conflict, or I'm just hoping for the good part to happen anyway?
Okay, excellent. That wraps up our premiere.
Thank you.
Okay, so see you on campus, Timo.
See you on campus. Now I need a coffee. Let's get a coffee.
Thank you for listening to Make It Science, the HHL podcast. Stay curious, stay driven, and as always, make it happen.